Hey everybody, thank you for joining. This is part 3 of my Investing 101 series, all the tools you need to be an expert investor, giving you a whole life of learnings and everything you need to know, laid out in a very simple to understand manner. So a big thank you to all the people that reached out to me saying, where is part 3? Because you guys are looking for it. So here it is. This is all about analytical skills, and this is actually one of my favorite areas. I would even consider this my wheelhouse. I am not a nerd, but I do enjoy analyzing data and looking at charts and figuring out patterns. So I'm going to show you everything that I know, everything that I do, and hope you like it. So this channel is about math, money, and freedom. And although this will be heavy on equities, I'm also going to talk about all the tools you need for crypto as well at the same time. So if you're just a crypto person, this will be interesting for you too. If you're an equities person, it'll be very interesting. So let's jump in. First step, of course, we are at part 3, the analytical skills. Now, we've already covered the right mindset and financial literacy, but this piece here is probably one of the most important. Now, I'm not going to talk about technical analysis. I do that in a separate series, my TA Tuesday series. But technically, analytical skills ties into TA, but I'm not going to include it here because there's simply so much to go after. But consider that the 17th step, and there are 16 steps in this video. So I'm going to start your engines. What I mean by this is to be successful in the market, you need to be firing on all cylinders. You need all the tools in your toolbox. You can't just be TA, or you can't just be analytical, or you can't just be macro, or you can't just be an options trader. You need to be able to do it all. And this helps you ramp up and be an expert in all of the key areas to be successful. So the very first step, and I broke this down into steps because that's the way my brain thinks, is first of all, introspection. Now, if you sometimes do not have the skills or you don't like doing certain types of work, you need to shore up that gap. Either educate yourself or find resources that will shore up that gap for you. So it's very important to look internally. There are some people that simply don't like spreadsheets. They don't like math. They don't like TA. They don't like analyzing financial statements. It's like filing your taxes or pulling teeth. It's just not fun. But there are other people that like to do it. So at the same time, if you have the right tools, it makes it a lot easier. And I'll showcase as well some of the tools that I use to be able to do this. The second step is very, very important. And if you can identify something that is of interest to you, and it is your specialty, doing what you like is like freedom, and it'll make you happy. Now, what I mean by that is I was working for 30 years, and I retired last year. And I started doing this for fun to help people embrace crypto. And it turned into, a situation where I'm actually busier now than ever before, but I really, really enjoy it. And I really enjoy helping others. I find it very rewarding. So a big thank you to everybody that's part of this whole community. But again, if you can find out what you like doing or what you're interested in, it makes it so much easier. So I'll give you some examples. Imagine you're interested in crypto or autonomous vehicles, or psychedelics, or curing cancer, whatever floats your boat. If you can tie it into your research, it makes it so much easier. So think about a space you like and you're interested in, and then dive into that. So that's number 2. Number 3, it's very important as well to understand your segments and identify what's hot. So this wheel here goes into all the major common aspects of sectors, from professional services to manufacturing to industrials, aerospace, internet, retail, media, tobacco, you name it, healthcare, pharmaceuticals, IT services. It's all there. But there are some times when things are hot, when money flows in. So for example, we saw last March a lot of money flowing out of certain sectors like airlines and movie theaters, and into certain sectors like teleconferencing, digital advertising, digital retail, online shopping, all that type of stuff was red hot. Even yoga pants, Lululemon, everything went crazy. So you need to be on top of what's happening in the macro world to identify what the next big thing is and where the money's going to flow, because that's very, very important. and it changes all the time. In fact, it can change week to week. So be on top of that. The fourth step is really to understand who the leaders are in every single space. Now, this is an interesting situation. So I'll give you an example. I get peppered all the time with questions about NIO and Volkswagen and how they're going to beat Tesla, but they're not. And sometimes I get into debates with people online, trying to convince them, the moat that Tesla have and what Tesla is and everything else. And sometimes it falls on deaf ears. But really, you can't get the same return if you don't follow the leader. You have to identify the leader in the space or the number two player. But as soon as you start going down the line and start going into tertiary industries that are related to a leader, for example, QuantumScape that makes batteries for EVs or charging stations, you're too far from the core and you won't get the same return. So think of a space that is highly disruptive and identify the leader and follow them hard. Amazon, classic point. Google, classic point. Google went up over 100 points today. And as you know, I'm very bullish on Google. And I spent a huge percentage of my time identifying which companies rule the world. And I take a piece of them. Square, Tesla, my entire portfolio is littered with, top companies that will rule the world. And that's very important. So number 5, though, even more important, and it sounds pretty obvious, but this is the key of getting in early. Now at Tesla, I bought a Tesla X. And this was over 2 years ago. And within a week of buying that car, I was so blown away by it. I said, I've got to own some of the stock. So I bought some leaps on Tesla. And now I have a bunch of Tesla at a very low price, about $40. So the question is, do you want to get into Tesla in March 2019? Or do you want to buy it 3 months ago when it hits $880? So that's the difference of getting in early is about 2,200% in this instance. And there's many other cases of that as well. I could talk, and I'll talk about a few other crypto cases as well, why it's important to get in early. But again, if you can go through the steps of this and follow my process, identify the segments that are hot where the money's going to go, identify the leaders, get in early. Don't be shy. Don't wait for it to run. Get in early. And it can be life-changing. Number 6, very important as well, is to know where you are in the cycle. Everything runs in cycles. From the beginning, and optimism and excitement and euphoria, etc. And then things can start tanking and ultimately capitulate, and then they're on the way up again, the bear market. But it's very important to know the cycle. Now, I hear a lot of people talking about the crypto cycle. And again, there's been so many videos made in this and everything, so everything's going to go to hell and fall by 85% in September, October timeframe. I don't agree with that. I think there will be a cycle, but it'll be nowhere as harsh as before. And I have some upcoming videos on exactly what my interpretation of that cycle will be and what it'll look like when it'll happen. So stay tuned for that as well. And if you like this content, hit the subscribe and bell. And thank you. I try not to shill at all, but again, there's some very interesting stuff coming in the near future. Number 7, understand intermarket relationships. Now, this for many of you is kind of new, but it's also very, very important to really understand how things are related to each other and correlated, inversely related, etc. I'll give you some more examples that'll bring it back to earth. But I know many of you probably don't know what bonds are, but typically when stocks go up, bonds go down and vice versa. Also, it can be tied to what's happening in the economy. Is the economy expanding or contracting? And you can understand the correlation between things like stocks, bonds, and commodities and stocks, etc., etc. So it's very, very interesting. A simple way for all of you to wrap your heads around exactly what I'm talking about is if you imagine we're going into a period of expansion, economic expansion, what typically happens? Oil goes up. Or if summertime is coming, people do a lot of road trips in their cars. There's a lot of demand for gas. Oil goes up. And as soon as September hits, the price of oil goes down. I used to trade oil back in the day, so I'm very familiar with these simple trends and patterns. But again, think of exactly where they are. and be on top of it and be able to move ahead of it in anticipation. That's probably the most important thing. Okay, point number 7, part B, is understanding the relationship between, say, Bitcoin and the M2 money supply. I've been in Bitcoin for about 3 years, but I really got excited in March when I heard about all the money printing, because I understand macroeconomics and I understand exactly what this meant. And when I heard they were going to print a whole bunch of money, I knew that would debase the currency and people were looking for a hedge. And that's exactly what's happening. There was just a Fed meeting today where they decided to keep the interest rates close to zero. And of course, what are people going to do when they get no interest on their fiat? They're going to seek alternatives so they can get some type of return on their money. Those alternatives will be real estate, crypto, stock market, maybe even, I should just say, maybe even things like precious metals. But all of these will be where people will go to get a return on the money. So again, understand that correlation. Watch, read, learn everything. There's another point as well. Not just money supply, but Bitcoin is also correlated to the Dixie. This is the basic index of the US dollar as a currency and how strong it is. And today, live, as the Fed was having their meeting saying they're going to keep interest rates low, the dollar tanked in real time. You could watch it. The reaction from Bitcoin was a little bit muted because of the fact that people were expecting Facebook to put Bitcoin on their balance sheet, but that's a separate issue. Anyway, since the ethics and the constructs of Facebook and Bitcoin are very different, it's probably a good thing that Facebook doesn't have Bitcoin, because that we don't want anything to the perfect reputation that Bitcoin has. So thank you, Facebook, for not doing that. There is another relationship again. Again, a little bit more macro related, but this is a relationship between, again, Bitcoin and the 10-year interest rate as the Fed meeting happened. So these are just things that you can just keep in your back pocket, keep an eye on those charts every day so you can understand exactly the movements of these macro indicators to actually how they influence Bitcoin. Number 8, this is my favorite, is understand proxies and arbitrage opportunities. And one of the reasons I think my channel accidentally took off was I was sharing kind of my trades, and I saw a huge arbitrage opportunity when I saw MicroStrategy buying a bunch of Bitcoin. I knew where Bitcoin was going to go. I knew the market didn't realize MicroStrategy had a bunch of it and where it was all going. It was completely undervalued. Did a huge, very risky option trade, made 100 times, which is now way more than 200 times my money in literally very few days. So again, having the ability to see and identify how things are related and the patterns, you can identify money-making opportunities all day long, which is super cool and super fun. Another one I did, again, the channel was just starting, and it was Christmas Day. And of course, what do we all do on Christmas Day? Yeah, we look at charts, and that's what I was doing. And one of my favorite ratios is to look at the ratio of Bitcoin to Ethereum or Ethereum to Bitcoin, whichever way you want to look at it. And I saw this dipping down to close to an all-time low. Ethereum was at $603, and I took the time out to make a poorly edited, recorded video on Christmas Day, but I wanted people to say, hey, Ethereum is drastically undervalued. And it was at $603 at the time. So that Christmas Day video was 124 days ago, and Ethereum is up 460%, and that's 120 days. So pretty good return. And again, just by looking at charts and identifying patterns, again, part of the analytical skill set that you need to have. Number 10 is knowing your ratios, understanding exactly what types of ratios to look at, where to look at them. And this is a sheet I share with Patreon with some of the key ratios I look at. I also look at ratios of ratios to ratios and distance from the mean and all sorts of things. So things like PE ratio, PEG ratio, 1-year targets from analysts, the delta from the target, when I do reports and trade alerts, the distance from the 52-week high, price to sales ratio, EBITDA, very important indicator of profitability, 50-day moving average, 200-day moving average, the DMA delta and how far these moving averages are away from each other, whether they're positive or negative, a very important indicator. Your book to value, your price to book, your earnings per share, your short ratio. These are all key things that you all need to be very, very familiar with to understand how to profile and identify if a stock makes economic sense to invest in or not, or if it's overvalued or otherwise. Now, another thing that's very funny, which I like looking at, is how to value a disruptive stock. Now, I'm not going to throw Motley Fool under the bus, but they did come up with this graphic that they were very proud of when they were comparing Toyota, Volkswagen, Ford, and GM to Tesla. And they said the market cap of Tesla at the time was about $1,400 per vehicle sold, which is a lot more than the other car companies. And Motley Fool are like, yay, look at this, Tesla's a stupid company. And what happened after that? Of course, the Tesla stock keeps going up because it's not a car company. This is where everybody misunderstands. They don't understand how to value. So if you value something that is not a car company against car companies, you're going to get mistaken. And that's where things fall down. So the Motley Fool, not saying that they are foolish, but be careful what you read and don't trust analysts. And sometimes I see analysts on CNBC and I'm wondering, why are they even analysts there? They don't know what they're talking about. And you hear politicians and analysts talk, some of them talking about Bitcoin, and it's embarrassing. You've got Nobel laureate economists talking about it. They're like Fortune magazine yesterday I mentioned. It's very interesting. Anyway, so just be careful what you read. Understand how to value disruption and keep your eye on the ball. And if you look at all the component parts of what Tesla is and you monetize them individually, that stock's worth way over $3,000 to $5,000 a share in the next 3 to 5 years. So think of that, 3 to 5 and 3 to 5. Boom. Simple math. Anyway, enough on that. So the other thing that's also important, number 12, is understand the line of sight to profitability. Now, I don't mind investing in a disruptive stock that's making a loss, but I don't want them to lose for more than 3 years in a row. And this is DraftKings I was looking at very carefully. I was interested in investing, but the piece that held me up was the fact that not only, well, a few other things, but the main thing was I had no line of sight to profitability. And I understand it's important to invest in growth and everything else. But, Tesla invests so much in charging stations and gigafactories and all this type of stuff. And they still make a profit. I know people will debate me on this in the comments, but anyway, you got to have a line of sight to profitability within 3 years or else they get written off, from my regard. The other thing that's important, number 13, watch for insider selling. Keep an eye. So there's many sources where you can get a list of all the people, insiders and companies that are selling their stocks. Of course, if they're publicly traded, they have to file it, and you can look that up pretty easily. Obviously, if you've got a whole bunch of insiders and they're selling a big proportion of their stock, it's a red flag. If they're selling a little bit for lifestyle, like buying a house or going on a vacation or getting that Ferrari they always wanted and they worked really hard all their life for it, that's fine. But if they're dumping everything, it's not a good sign. And you can easily ascertain it here as well. Now, another one, this is number 14. Beware of dilution, share dilution. Just imagine a company has 10 million shares issued and they issue another 10 million. Your stock is basically worth half the value. So understand that as well when this happens. Now, it's okay for a company to raise a little bit of extra money to invest in R&D so they can scale and grow, because then you are the beneficiary of that. That's fine. It's also some cases interesting if a company issues shares to buy Bitcoin and put it on their treasury. You all know who I'm talking about. That's fine too. So just, but be careful of the big share dilutions, because that can really impact the price of your stock. And here we are, number 14A. Dilution can also happen in crypto. This is XRP, where they have over 50 billion tokens sitting in escrow, ready to be dumped on the market. And of course, you know what that'll do to the price of XRP. Not a good thing. So be careful of that. 15, look for growth. I like Very aggressive growth. I like 25 to 50% growth year over year, or even faster. 100% is good. Just look at the growth numbers from Tesla and other disruptive stocks. Look at companies like Google that are growing earnings by 50% year over year. It is incredible. So again, look for growth, whether it's revenue growth, earnings growth, both would be optimal. But that's critical as well to look for. And number 16, the 16th step, understand the network effect. The network effect applies to companies like Facebook and Google and Netflix and Amazon, but also applies to Ethereum and Bitcoin. This is a quick chart of Metcalfe's law tied to the Bitcoin price, and the correlation is quite staggering. As Bitcoin add, 60,000 new users a day, the Metcalfe network effect gets bigger and bigger, and so does the value of the underlying asset. Same for Ethereum, the type of work they're doing in Europe and everything else right now. So crazy good times. So keep an eye on that. So in conclusion, a long one, but literally the key thing here to remember, everybody, is I just uncovered probably a lifetime of lessons, summarized 16 steps. If you can master these 16 steps, you can uncover a whole bunch of money-making investments. And be prepared to do a lot of hard work, because this is not easy. This requires skills in so many different areas and a ton of analysis. We're talking 16 hours a day, 18 hours a day, 7 days a week, reading copious amounts of data and information and to stay on top of things, analyzing charts, reading filings, understanding ratios, modeling like crazy. So it's not easy. And if you're not prepared to do the work, there's a solution. There's a Swiss Army knife you can get in your back pocket. This is the Patreon for Invest Answers, but don't join because, they bill the first of every month. So if you join today, they'll bill you again, I think in 2 or 3 days on the 1st of May. So if you're interested in jumping in, jump in 1st of May. And the community is incredible. And apparently I've heard it's the best Patreon ever, the best value for money. Ranges from $1 to $10. So anyway, Math, Money, Freedom. Thank you, everybody. If you like this content, hit the like, subscribe. Part 4 will be coming next week, and that'll be even more interesting. How to generate perpetual revenue streams. People are always asking me, how do you do it? How do you retire? What does it take? What are the mechanisms you can use to do it? And I'll be sharing all of my knowledge there too as well. So thanks all. Be safe. Take care. Bye.